today's episode, we're going to focus on the worst case scenario for Bitcoin at this point in the cycle. We'll be talking about the pre-halving period, generally the 70, 80 days that we have left until the halving event. And we'll be talking about what has historically happened in terms of Bitcoin's price action to potentially reflect on a worst case scenario from current price levels. Let's dive right into the video. Subscribe to the channel for more videos like this in the future. Like the video if you enjoy content like this going forward, and let's dive right in. So we have this macro higher low, this technical uptrend that Bitcoin has been respecting from the bear market bottom really in November 2022. This is where we formed this technical uptrend, and Bitcoin has been really solidifying support at this uptrend, but we haven't really revisited it in quite a while. It's been since Q3, Q4 of 2023 that we haven't really seen a support retest here. And you can see how even though this was the reaccumulation range that Bitcoin developed, reaccumulated going sideways before breaking out, the top of this reaccumulation range is 31k, and you can see how a pullback into 31k wouldn't be possible due to the fact that this technical uptrend is ascending and is probably going to grant support at higher prices before we even drop into 31k. So 31k as a pullback area for buyers was always going to be a long shot. We tend to see front running in these sort of pullback areas, but this technical uptrend, should we even get there as a worst case scenario, that just shows how it would facilitate front running at around 33, 34k rather than getting us for a retest of the top of that previous reaccumulation range at 31k. So we can see that this in general, a drop into the technical uptrend would require a 30% retrace in total. But overall, we've already seen from 46k roughly to 38k, that's 20% already. And we've seen a reversal in that period in last week's reversal candle. So 20% has already occurred, but for additional price downside to occur, we'd have to just lose this 31k to get us to that technical uptrend. But the thing to really focus on is that we have to consider these two phases. The pre-halving downside, which is approximately 80 days before the halving, and the pre-halving rally. And the pre-halving rally tends to occur 2 months before the halving event. And we've seen this time and again, not only in the 2020 cycle, but also in the previous cycle of 2016 as well. And you can see here how this orange slither is just showcasing to us a very short pre-halving period for any potential downside. So we only have 2 weeks left, roughly speaking, for a potential dip, just like we saw in this period. So here we saw a real drastic crash, which I'm not saying we're going to get a drastic crash like that in this cycle, but this just showcases to us, just like 2016 did as well, that during this period in the cycle of around 80 days before the halving, we tend to see pulling back. And this time was no different. We also saw a pullback candle last week. The question is, could we still see another pullback? And if we were to see another one, we'd see one over the next 2 weeks before this pre-halving rally occurs. And the thing to mention is that we are in a reaccumulation area right now. We're in a reaccumulation range just like we were back here in 2023 for the majority of 2023, and just back here as well once we were able to break out from this bear market bottom accumulation range into this reaccumulation range and then breaking into this reaccumulation range. And you can see that we're telling a story of reaccumulation as time goes on. Here's a reaccumulation range, here is one, and here is potentially one as well. And it's interesting to just juxtapose this current cycle with what we saw in 2016 and 2015, where we saw an accumulation range at lows, and then we saw a reaccumulation range develop going into the halving event. And even though we broke out from that reaccumulation range, we formed another one in the post-halving period. So you can also see how 2016 was a cycle, a tale of multiple accumulation and reaccumulation ranges at highs. And just like we have right over here in the 2016 cycle, that 2-week period around 80 days before the halving event, you can see how pulling back and general downside volatility around this period has historically occurred in that cycle as well, just like it did in 2020. In 2020, it was a bit more accentuated, that downside, due to the pandemic. But in 2016, you can see how downside wicking inside the reaccumulation range also occurred. This was downside wicking of 18% deep. And you can see how this is still within the reaccumulation range. So you can see that we're here in the reaccumulation range once again, very similar to 2016. And in 2016, we saw downside deviation wicking within the reaccumulation range. What we're seeing in this cycle is also downside wicking, but below the reaccumulation range, not within it, but just below it, still nonetheless though, pulling back in retracement within this overall reaccumulation range and holding that reaccumulation range as we approach the halving event. So if history were to repeat based on 2016, we should see some sort of upside going into the pre-halving rally. But the next 2 weeks are going to be quite interesting because they are opening up for potential still downside wicking below this reaccumulation range, like we saw in 2016. In 2016, you can see that there was multiple weeks of downside wicking within the reaccumulation range. So if this is any indication, what if we get some persistent downside wicking still, even in this cycle within the reaccumulation range, maybe still downside deviating below that reaccumulation range? This sort of downside volatility before the halving isn't out of the ordinary. We've seen that in 2016, which closely resembles what we're going through right now in the cycle, because we're also seeing a reaccumulation range at highs. So any downside deviation below this range in this current cycle is a possibility. So that then raises the question, will we go lower than this downside wick? And it's very difficult to really say it will, because there are very specific conditions that Bitcoin would need to simply meet to break below 38k. Downside wicking below this range low is still a possibility, but as long as that reaccumulation range holds, then we're only going to finish on a 21% retrace from the highs. And history is suggesting to us that we're probably going to see this reaccumulation range continue to hold going into the halving. So this worst case scenario, while that continues to maintain itself as a worst case scenario, it really depends on this reaccumulation range breaking down. And history is suggesting that these ranges this close to the halving don't tend to break down. They do tend to see lots of downside volatility, but 2016 is suggesting to us that we don't see these ranges get lost. However, we could see a breakout going into the halving event, which is why this pre-halving rally period that we're slowly transitioning into is going to be an exciting time, because either we break out from this reaccumulation range just like we saw in 2016, or we simply just will tend to just consolidate at these highs, maybe try to challenge these 46k levels, maybe form a range just around here. Some sort of extended consolidation or just limited upside is a possibility in this pre-halving rally period. But if there's going to be a really bearish catalyst, we're always going to need to focus on this technical uptrend. But history is suggesting that this reaccumulation range, just like in 2016, is going to continue to hold, which means that if we were to see a pullback into the technical uptrend, maybe it's going to be around the pre-halving retrace period. And you can see that the pre-halving retrace period tends to occur around the halving event itself. So right over here, we saw 20% retrace. So what if we were to see a 20% retrace once again at around these levels? Maybe we get to retest that technical uptrend right over here. And if it's not going to occur in mid-April, this technical uptrend line is going to continue to climb up and represent higher and higher prices. So at some point, this technical uptrend is actually going to represent roughly 40k or so a few weeks after the halving. So a pullback into the technical uptrend is going to increase in probability as time goes on, simply because of how it's ascending over time. And it depends on how long we're going to reaccumulate here in this range, because if we just don't break out and just accumulate right over here, then at some point you'll see that the range low of this reaccumulation period is going to become a confluence support with the technical uptrend itself. So continued reaccumulation going into the post-halving period, although I think it's quite unlikely, we should see some sort of move going in there, going into the halving, probably a breakout just before the halving, and then that pre-halving retrace going and getting closer to this technical uptrend. I don't think we're going to get confluence in the range low with this technical uptrend, but really interesting to see how this technical uptrend could provide vital support in this post-halving reaccumulation period that tends to occur a few months, even a few months after the halving, definitely several weeks after the halving. But in any case, a worst case scenario for Bitcoin would be to lose this reaccumulation range, but history is suggesting to us that we probably won't see a breakdown from this range going forward, despite scope for some downside volatility below it going into the halving event itself. In any case, that's about it for today's video. Thank you so much for watching. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital and I'll speak to you in the next one. Check out the top right hand corner video for more.